So in the last video we had a look at risk identification, which is mostly bundled in this area of the dashboard. Now let's have a look at controls, and I'm going to go straight into what we call our control design matrix. Now I think whenever you are relying on controls, the first thing you will do is write down the process. So you would do a process definition, have interviews with staff at the relevant key positions. You probably use Microsoft Word or Visio for that, and you can just add that to the working papers document manager. That's step one, and then I think after step two, you would either go through that process description and pick out the individual controls, like which controls are actually in that description that you would want to review, see if they are actually in place, do a walkthrough test on, or then later on test. So that you can still do that, and then you can create your controls manually. Another thing that I will show you later on is how to use the risk library also as your library for controls, which again makes it extremely efficient. Before we get into that, a little bit on the UI or a little explanation on the control design matrix that you see on the screen right now. Similar to the risk report, we have some configuration here, so you can use that to sort, filter, or build your view. So each and every column here, I can switch it on and off depending on your preference, depending on the number of fields that you show in your controls dialog, and save that as a view. I'm just going to switch that off for now. Then we call it a matrix because what's important are the rows and the columns. Here to the end of the matrix, you see the three risks that we have identified that are linked to the business cycle revenue. So there's our salesman's bonus, the risk that we're tracking throughout this whole demo, downturn in the economy, and customers without credit approval. And you can see the assertions here as well. Now, just by double clicking that risk, I can open it, and well, it's the same risk that we imported last time. I'm not going to explain this too much, but we're now going to look at these areas here for controls and how to edit the association. One thing that I could do is click the linkage icon here, and I could create a new one manually. I just, similar to what we've done for the risk, I just create a new control. This is probably what you would do when you have your process definition in place, your process description, and you pick which ones are the controls. You go in here, copy and paste them, and then fill out the dialog. I could also import controls from risk space, which is very similar to what I've shown you for the risk, so I'm not going to show that again. What I'm now going to do is import controls from a file, and I'm going to use the same risk library that I've used before, because that also contains controls. So it's comparing again. Now you can see that in my risk library I have 9 controls for my business cycle revenue, receivables, receipts. And I'm just going to say, for example, that these first 4 controls are controls that might mitigate this risk that we have for the salesman's bonus. I'm just going to click OK. You can see it's really quick, and it has now imported those 4 controls into my engagement file. I can now navigate through the 4 controls, and in this part of the dialog I can see that these controls are linked to this risk. So if I look at this prepare aged accounts receivable listing, all this information is copied over from the risk library. So again, it's just as effective as using the risk library for risks. You don't have to document, you don't have to fill out each and every field. Well, let me just click OK first and show you what now happens in the matrix. It's running, yep, there we go. So now the controls have been populated here in rows, and here in this column I can see that this control, prepared aged accounts receivable listing, might mitigate this risk if effective. All the properties, all the fields that you could complete in the controls are also here per column. So this gives you a very good overview of your of all the controls for your business cycle receivables. Now let me quickly do that for another risk as well. So I'm just going to open my downturn in the economy, do the same process, import from file, browse, go to my risk library file, and I'm now just not going to pick the first 4, I'm going to pick the last 5. Okay, just say okay, and then you'll see the impact on the control design matrix again. So now it's building up, it's more populated, so that makes it a whole lot clearer right away. Now let's go back to the controls dialog and let me explain you a little bit more on the actual fields that are in place. You might notice that this is now blue. Throughout Audit, blue is the color of controls, just as it is here. Risks are red, reportable items are green. Makes me think of a song, so sorry about that. So here at the top we have the control documentation, which is similar to what we documented for the risk identification, the beginning. So it's just your control, short name, long name, and the business cycle that it's linked to. Then here we have a couple of attributes, whether or not this is a manual control or a key control. There are, similar to risks, there are actually more fields that you can switch on and off. That's something you can do at the firm level, even per profile. So you can have a more extensive or a smaller controls dialog. If we now go and look at these two, I think the first step that you always do is evaluate the control environment. So I think you look at your process description, and quite often, I think very common, you do a walkthrough test. So the walkthrough test itself, we don't do that in the matrix here. The matrix is more like the overview, the summary for that. But I would link a document, probably an Excel sheet, where I'm performing and documenting my walkthrough test. So we give you a link here to link another document, then it becomes a hyperlink. You can just click and drill down to the details. The result from that walkthrough would be whether or not the design is satisfactory, yes or no. And whether or not the evaluation results are satisfactory, yes or no. So we had this merged in a prior version. We've now broken it up as per the ISA standards. And again, here's my roll forward option to keep my risk when I do a year-end close and roll forward. So that's step 1. That's evaluating the control environment. After you've done that, you will probably, well, as we always said, sit back, look at the controls and think whether it's efficient to gonna rely on controls, yes or no. So that's where this second area or this area comes in place. So now I can document if I want to test the control, if I don't want to test the control, or if I'm relying on my prior year test of controls. So right now this is set to yes. Similar to that walkthrough, I will now link this to a work paper where I'm actually documenting my test of controls. We'll have a look at that sampling sheet a little bit later on. And I would link that supporting working paper here from the document manager. And then, quite important, I would conclude in the end if the control is effective, yes or no. So those are all the fields in my controls dialog. When I've said this control is effective, and we're talking about this first line, control is effective, yes, that would mean that this control now mitigates the risk here for my salesman's bonus. And this is where the matrix shape really is very effective, I think. So I can now see that through this preventive and detective, this risk is mitigated because the control is effective. I now go into my salesman's bonus risk, or I could just, sorry, I could also have used the linkage here, but I just wanted to show you what it looks like in the matrix. And I would now say here, risk treatment mitigation, yes, this risk is mitigated by these controls. With that, I would also say that my control risk for this particular risk is low, And probably with that, but this depends on your firm's methodology or your approach to auditing, I would say that my risk of material misstatement is also low. Now, when I click OK here, just give it a few seconds to update. But what we will see is that here in this, let's call it conclusion line, do the control procedures mitigate the risk factors? It will say a yes. So I would suggest to look at this per column, per risk, and you would see whether or not a risk is mitigated by a control. One more thing that I would like to explain here on the control design matrix is if I just pick this one, for example, I'm just opening the control and I'm going here to my associations here at the bottom, and I'm going to edit my association. I could now say that, you know, if this is a very very broad control or a very important control, let's mark it as a key control. Oh yeah, it is. I could. It could be possible that one control actually mitigates, prevents 3 risks. So I've marked that here. If I now click OK and give the control design matrix a couple of seconds to refresh again, what you will see is that the control name, the description here, now becomes shaded. Let me just zoom in a little bit, and it becomes red. So with that. That shows the, let's call it, relevant importance of the control. So these controls are all white because they're only linked to one risk each. This control is shaded, and the shading goes from white to gray to red to very bright red. And that shows that if this control is effective, it's actually very efficient to test this one because it will mitigate multiple risks. So if you have more risks and controls and your linkage is a bit less basic than what I've done here, you will see all that shading, and our idea is that it will really attract your eye and say, okay, these controls are really efficient if we test those controls. Okay, so that's the control design matrix. Now the part that we've added for version 17 is that we've added a conclusion here at the bottom. And I can now, conclusion, yeah, more or less draw this conclusion at the assertion level. So based on the linkage to my risks, so you can see that my 3 risks are linked to existence, accuracy, and valuation. And those risks have controls linked to them. This column here says, do controls exist for the risk? At the assertion level. So that's yes, yes, yes for those 3 assertions. And now I can draw my conclusion here saying that, okay, for completeness, no controls are in place, so my control risk will continue to, or will be high. For existence, accuracy, and valuation, I'm actually going to set that to low. If you would want to, because this is a relatively small matrix, we also give you the option to filter. You can even filter at the assertion, per assertion, which might make it clearer to the user to see which assertion has risks linked to it and controls linked to it, and therefore the control risk might be low or high. Okay, so that's the, let's call it, end result, the conclusion of my work that I'm doing in the control design matrix. I'm now just going to save this document and close it, go back to my dashboard, and let's continue to go to the go back to the FSA worksheet. And we'll probably use receivables again as the example. So last time that we were in the FSA, we've populated the inherent risk from the risks that I have identified through the risk dialog. Now I've done all my controls work. I've evaluated my control design. I've tested my controls, and my conclusion was that except for completeness, the control risk for all the other assertions for the business cycle revenue is low. So when I now go, well, let me just do it here for the whole column proposed. And you will see that for my receivables, the conclusion from my control design matrix now flows into my FSA as well. This is also where you get the benefit of the where you see the well, let's call it switch between business cycles and financial statement areas. Because when I go to my financial statement area revenue, which is also linked to my business cycle receivables, I can now see that at the assertion level, my control risk assessment also flows into my revenue. And that's because here in this column business cycle, it's linked to the same business cycle. So again, I think that provides a lot more automation. It will help you to make sure that you are consistent. And similar to the inherent risk, when I now go in as a user and I override whatever comes from the control design matrix, I get this overridden, this bright red border indicating to me, okay, the user has overridden this. And again, as a reviewer, I would pay particular attention to all those overriddens in the FSA. Very good. I think the FSA is building up to become really interesting right now. Let's make a little sidestep again to Constellation and see how now my Constellation view has changed after I've done my controls work. So it's building up. It takes a little bit longer because it's also the recording that I'm doing for this also drains some of my graphical performance of my computer. So if you compare this to the last view of Constellation that we looked at, you might now notice that we have a lot of these blue bubbles here. These blue bubbles actually are the controls. And similar to the risks, those blue bubbles, if they're larger, they're key controls. If they're smaller, they're, let's say, regular controls. So I can imagine that this is quite overwhelming. And this is only one business cycle, only the revenue we've generated controls for. So Constellation might become more and more, but in order to make it useful, we've created a lot of filters. We give you the option here to filter yourself, so I can filter out, I want to see controls, yes or no, I want to see pervasive categories, yes or no. One thing that I think really is relevant now is to go here and use one of those predefined filters, which you can find in this little menu bar, and go into business cycles. Okay, and then here I'm going to say I'm only going to look at my business cycle revenue, for example. There we go. So this now gives me a nice summary of my business cycle revenue. So I can see revenue there in the middle, I can see my controls, and I can clearly see which risks are now mitigated by controls. If I click on one of those risks, it opens up the risk card. We've seen that before. I get my visual reminder here again. So the salesman bonus is a significant risk, but right away from this little tick mark, I can see that it's also mitigated by the controls. And if I scroll a little bit further, I get my controls in place as well. Again, the asterisk here shows that's a key control that's effective, indicated by the little tick mark. I have a couple of non-material financial statement areas that are also linked to this business cycle. I can just switch those off and then really focus on the things that are relevant for my business cycle revenue. So kind of summarizing, we've imported the trial balance, we've calculated our materiality, we've said, okay, these are my material financial statement areas, we've identified risks, now we've looked at controls, and I think this is the point in time in the audit where you actually, again, sit back, evaluate all your control work, your risk identification, and now look at your year-end work and decide which procedures do we have to perform during the actual field work. And we're going to have a look at that in the next video.